Hey traders, welcome to Charts and Coffee with Raghee for Wednesday, December, whatever today is, 8th. And I'm 9th. There we go. The only reason I know what the day of the week typically is when I head on over to Forex Factory and take a look at the economic calendar. Oh, it's the 9th. That's the work from home phenomenon, by the way. If you've been working from a home office, you know exactly what I mean. Good to see everybody. Happy Wednesday, everybody. All right, so let's get to it. We have a couple things that are on my radar to kick off the morning. As a futures trader and as a currency trader, I've got my eye on that 10 a.m. Bank of Canada rate statement, that BOC. That stands for Bank of Canada. And you might say, Bank of Canada, Ron, what does it have to do with anything? If you're on the equities side of things, this could be an interesting play so just jot this down. Let me zoom in here. So jot this down. This could be an interesting play in things like FXC, EWC, the 6C on the future side, and of course, my Forex traders, dollar Canada, and any of the iterations of the Canadian dollar versus something else. Generally speaking, I am still very bullish the Canadian dollar, which means I don't want to buy it against anything really other than the US dollar, maybe the yen, maybe the Swiss franc. Okay, my Forex traders out there, those are the pairs that I would focus on. Dollar, Canada, versus the Swissy, and versus the yen. All right. So again, always think about that contrast. All right. Good morning. Good morning. Good to see everybody. Happy Wednesday. All right. So that's one of the first things that lands on my radar from the calendar. Again, what are we keeping an eye on? One of the things that I always like to remind everybody is what you trade is even more important than how you trade it. It's amazing if you have a rock solid watch list, if you have that process in place that precedes your trading. In other words, what am I going to trade? Then how am I going to trade it? You're going to be a whole lot better off. And in between all that is this process of finding the directional bias. A lot of that was just what we talked about with the dollar Canada, which is I want to be long dollar Canada. So I already have a directional bias. And then I got to think about, well, what do I want to be long the Canadian dollar against? And while that might seem a little inside baseball in the Forex space, gang, I promise you, this is exactly how it works from a relative performance standpoint in futures and in equity. So keep that in mind. It will serve you. All right, we have crude oil inventories coming out today. We do have an uptrend in crude. Let's jump on over to the charts here. We do have an uptrend in crude. You know how I define that uptrend? It's double green, gang. I got a double green uptrend. Moving averages are indicating that the path of least resistance is up. So it's pullbacks that I'm interested in. And by the way, how does the calendar help us out here? Earnings calendar, central bank events, inventory events, data releases. That all means there's volatility coming into the market. So while I'm not trading the inventory event, this is a really good point. Okay, so in your journal or I like to use a program called Workflowy. It's free. It's amazing. If you love to make lists, Workflowy is amazing. You know what? Let me see if I can't find a Workflowy here. Okay, so this is a Workflowy. You know, this is Workflowy. I use this for, you can call them notes, you can call them daily newsletters, you can call them whatever you want, but this is where, if it's the notes for my futures trading, if it's my ETF masterclass, which I just finished last week, we had 4 days of live trading, each day had notes. So this is something you could use. It's workflowy.com. Very cool site. You can keep lists. If you like to make outlines, this is straight up nirvana. All right. But I still like, good old fashioned pen and paper too. All right. So having said that, in terms of crude, keep in mind that events like crude oil are going to create volatility. I'm not trading, by the way, the expected versus the actual. I'm not even trading the API release that came out yesterday, which is the American Petroleum Institute, versus today's EIA, Energy Information Administration. I'm not trading those two numbers even against each other. What I'm remembering is that the release of both those two numbers creates volatility. I can measure that volatility, and then I can see where the exhaustion is. And that's really where it gets pretty exciting for us, where either as a day trader, I can measure that exhaustion via different volatility tools. That's what's hovering above and below my price action here. It's a process that I created back in 07, 08, called HPMRs, using volatility data from AutoChartist. And I'll have to give credit where credit is due. And so we can plot these kinds of things. And by the way, these are things, tools like this, HPMR, this is running on Thinkorswim. These are the kind of things that I make available to members in the Simpler Futures room. So these are things that will run on different indices throughout the day to take advantage of, where are we within the range of volatility? Where are we in that range? Okay. So, and by the way, that's how narrow. Okay, here's a really good example. This is how narrow the current S&P is at, what is it? Yeah, it's 7, it's 7 after the hour. This is how narrow that range is right now. Look at where we typically would be able to travel up or down to. Look how narrow that range is. Heads up, gang, we have a very compressed market going into the open. All right, let me check out some questions here. All right. Bear with me, gang. Actually, let me just move this down. All right. So, good morning. Janet mentions, hey there, Janet. These are the stocks that I have earnings into Jan Feb. Can you tell us how to trade them? Janet, that's something that I'll definitely do in Sector Secrets Mastery. I'll go into all those details, but let me just give you a place to start. Okay. So once you have your list, and that's great, you've looked at the calendar and you've determined where the time horizon, not the time frame, but the time horizon, in other words, 4 weeks, 6 weeks, etc., to earnings. Now I start looking for where I have good double green structure. That's the first place to start. Okay. All right. Let's see. Boris Johnson will meet with the EU today in a last ditch effort. Aren't they all last ditch efforts? It's really interesting. One of the places that I have been interested also, I didn't mention it with the currencies, excuse me. Excuse me. All right. One of the places that I haven't mentioned dollar weakness to buy against right now is in all that melee with Brexit. So the 6B, FXB, EWU, while those would typically be in play for me to the long side, I'm being a little bit cautious about those. But yeah, I think that and that's one of the reasons when I mentioned the currencies, you notice I didn't mention the pound sterling. And we're right back in that melee of Brexit. Has Brexit been going on for 22 years now or what? My gosh. But yes, every one of these seems to be a last-ditch effort. So I would say, the market's so used to this deadline. How many of these have come and gone and nothing's happened? I'm still more or less a fan of being long EWU and being long the 6B, because the narrative is not solely resting on whether or not Brexit happens. Remember, central banks around the globe are very supportive of stronger equity markets. I like EWU structure for the most part. So yeah, thank you for the reminder. And yeah, I still love, this is one of the symbols that allows us to trade countries, the stock markets of other countries, EWU. So love that. As far as a potential buy, and if the market moves lower, then that gives me another opportunity to scoop up some of this, which we really haven't had that many opportunities. Are there any Forex pairs that pique my interest lately? Well, I'll always start with an individual currency, and the individual currency that's been piquing my interest the most is the US dollar, hence why I mentioned those dollar pairs. All right, Pitbull low. Do I think we'll get that this month? So for those of you that are unaware of the Pitbull phenomena, we'll talk more about that tomorrow as well. So the Pitbull phenomena, the Pitbull low, comes from, I don't know, how many of you have read The Market Wizards? The very original, I know there's a gazillion of them now. The best one is The Market Wizards by a landslide. The second best one is The New Market Wizards. And then there's a couple, then we've got wizards for everything from there on out. Jack Schwager is amazing at interviewing people. They're incredibly inspirational and aspirational as far as reading those books. They're not tactical, right? They're really not tactical at all, but they're really great to read. I would highly recommend reading The Market Wizards. And in The Market Wizards, there's a trader by the name of Marty Schwartz, and his name was the Pitbull. And the Pitbull low comes from a tendency that he noted, which was that the second week of the month, Wednesday, Thursday, sometimes even Friday, but it's a latter half of the week where we tend to put in a low in the market, and that would set up a rally going into the next Monday or even into options expiration Friday, which is the third week of the month, third Friday of the month. So it's a tendency that I need a low, I need a sell-off typically to want to buy into that. One reason I think that whole rhythm might be disrupted this time around, Huffy, is because we have December 14 looming over our heads as a day where we're expecting this electoral college vote. That's where the electoral college voters, they sign their ballots, send them into the Senate, I believe. And technically at that point, it should be sort of a done deal. Once those things are signed and sent, I think the thinking is it's a done deal. Granted, they won't be read until the 4th of January and then officially certified, but that's the deadline. So I think the market's a little bit concerned about what's looming overhead in terms of the uncertainty of this ongoing back and forth about the election and the electoral college. So that might disrupt this typical tendency. We might see a sell-off next week. I don't know. It's an unusual timing where both of these narratives are hitting each other, are clashing into each other. Yeah, a lot of folks going digital on their trading journals. That's cool. You know, whether you're writing, which, gang, I prefer pen to paper. You know, no doubt, I prefer pen to paper. But whether you're doing electronically or digitally, some folks may not like that at all, and that's cool too. You know, for the folks that don't like to do that kind of journaling, and I'm not talking Dear Diary journaling, but it's for those of you that don't, I would highly recommend something like TechSmith Capture. It's a free tool from TechSmith Capture, and take snapshots of what you see throughout the day. And you can create almost a photo journal, which in many ways is actually even better than a written journal. You can take a little photo journal, annotate the screenshot. That's almost in many ways better. All right, so next up is, Brexit seems like it's been going on for a lifetime. I concur. But keep in mind those potential pound plays. All right, so what do I mean by a compressed market? We're just in a narrow range, and narrow is always going to be compared to normal. Narrow compared to what, right? It's always relative to what my typical volume would be, or narrow compared to what we did the same time yesterday. You know, it's always going to be a comparative process. I compare narrow to historical volatility with a 6-month look back. So that's what I refer to as PMRs, price movement ranges. Okay, so next up is Abe asks, is there a way to attend? Yeah, Abe, you can join for just a month. Yeah, you can join for a month. If you join for the month, you'll get a total of 2, 4, 6, 8, I think 9 sessions, 2 1-hour sessions a week, 1 larger 1-hour session of live trading with me, and you'll get my watch lists and my trades throughout the month. So if you just want to join for a month, that's certainly something you can do. And you would do that over at simplertrading.com/sector. simplertrading.com/sector. And then for those of you saying, hey, Raghee, I do want to get a better idea of some of the things that you're doing in terms of lists and tactics and some of these tools that you're referring to during the charts and coffee in the morning, check out the Countdown Trader. Just countdowntrader.com, and that's totally free. That's a great way to supplement our time here together in the morning. Okay. All right. So next is, and I just pushed both those links through the chat there, so you can see that. All right. As far as Estimize, follow me at Estimize pretty much everywhere. I'm just Raghee Horner, Nick. Yeah, Facebook, YouTube, Twitter, Instagram. I'm Estimize, whatever. I'm usually just Raghee Horner, first and last name. All right. So, by the way, do we have gap psychology today? Yes, it looks like we may. What I'm looking at is for the ES to open above 3708. That means we may get a little bit of weakness right on the open. Now, this is something I mentioned to our simpler futures traders yesterday. So keep this little tip in mind. And that is, if the market opens above the 4 p.m. close, but not above the 4 p.m. high, that is not gap psychology. And oftentimes the market will rally instead of fade a very slight gap. A lot of folks are looking at the 4 p.m. To me, that's an incomplete look. So if you have just barely a gap, a lot of times that's an indication for gap and go, as opposed to a gap fade. So something to keep in mind there. Okay. All right. Next is, yeah, I do drink water every now and then. I know for a while, the only water I would get is literally in my coffee, but I am trying to drink water. This will never be charts and water in the morning, though. I promise you that. Okay, so we do have a little bit of a gap psychology, it looks like. So where would I need to open on the Dow? I would want to open above 30,237. Now, yesterday was a really great day of trading. And, you know, here's a really good point to bring up as we wrap up our session here. How many of you in the room are day traders? You're looking at day trading the sectors or the stocks or the futures. So if you are looking at day trading, right now, we're still operating with long only. I'm not a two-way trader. I'm looking at directional bias and I'm looking for trades only in that direction. And I highly recommend you start there. Don't be open to two-way trading in the beginning. You might get there later on, years into your trading. But at the beginning, try saying to yourself, all right, what is the likelihood that the path of least resistance is to the upside versus the downside? We have been looking for path of least resistance to the upside since November 3. And that has been a higher, much higher probability direction to take day in and day out. All right, so that's one thing to keep in mind. So directional bias is bullish. The second thing is, for example, yesterday, all right, what did we do? And there's two ways really to be a day trader. And I'm not talking about what's right and what's wrong, but I'll engage the market intensely for the first 2 hours of the day. That means that I'm writing notes, I'm keeping tabs of what time it is and the kind of behavior. You can be intense for 2 hours. You can't be intense all day. I don't believe you could be operating at a high level all day long, nor quite frankly, do you want to. So between 9:30 and about 11:30, I'm marking what's happening at different segments throughout the morning. And what we noted all morning long was we wanted to be long. We saw a breach, we saw a retreat, and we bought. And we bought in everything, even the NASDAQ early in the morning. But of all the markets yesterday, the NASDAQ was really the least compliant. Facebook really took NASDAQ for a ride. So what do? Pick bottoms in the NAS? Get whipsawed in the NAS? No. We said, well, where is their relative outperformance? We went through the process and realized S&P, Dow, even the Russell, which I have a sort of love-hate relationship with. And that's what we focused on. And that's exactly what I'm going to be doing again today, following that same process. So for those of you that were with me yesterday in the morning in the Simpler Futures room, we went 4-for-4, which is great. All right. We took longs, we waited. And so the difference is, did you execute 12 trades yesterday? That's fine. I'm not going to be a rapid fire trader. I'm a little bit more of, as they would say, a sharpshooter or a sniper. I'm waiting for a very specific environment. I'm waiting for a very specific opportunity. And when that zone arises, I might take that with options on the underlying ETF. You could take it with minis. We could take it with micros. We might even favor a sector or an individual stock, but I'm waiting for a very specific zone of opportunity. So in that way, we're not over trading. We're not overdoing it. We're waiting for our pitch, if you want to use a batting analogy, and that's what we're going to swing at. And that's exactly what I hope you guys think about when you're trading. Don't get into this rapid fire stuff. I truly believe the folks who can put on a lot of round turns per day and be successful are far fewer. Your broker will love you. Your broker will love you, but I think you're going to be far better off being far more discerning, far more selective. So think about that. Think about finding that zone and having the patience to wait until that zone is reached. I think you'll have much better results as a trader. And then once you've got that advantage, press that advantage. Okay. All right, gang, that's it for today's show. I will see you all tomorrow at 9 a.m. Same channel, same time. All right, gang, be good to each other. I'll talk with you soon.